Let me start the recording. Fantastic. So you click into money and its window will open. Guys, especially beginners, right? If you come into money, it has everything that you need as a beginner, as an intermediate, as an advanced, that you need to become profitable in this market. All you have to do is really tap into the education, right? And really, of course, work on yourself, because the majority of the job that you have to do in this market is not really finding opportunities. It really you yourself assessing yourself, your mindset, your, let's say, your emotions on that day. Are you feeling that will dictate how you do react to things that the market is trying to show you, right? So as you guys can see, it has 3 sessions here under its favorites: market mastery, day 1, day 2, day 3. If you do these 3 classes, like every basic about trading, lot size, pips, entries, and things like that, these 3 sessions will give you all of that, right? So it's really about you taking time, yourself taking time and really going through these 3 sessions that I would recommend really every beginner should go through. It's basically a boot camp, all right? Now we're going to talk about something that is called divergence, right? And I'm going to show you on Mani Kinone session. It has one of the sessions. Also, there's a strategy called scanner source, all right. I don't particularly use that strategy, but many people on the team do. All right. So you have the Aliyah and Chris from the team. They do. I think they talk about the scanner source strategy. So you can join their sessions. Aliyah and Chris from the team. All right. So if you want to learn about the scanner source plus divergence, watch this session. Now, it has a specific session here that it talks about divergence. All right. Let me just, there's a specific session here that, here. This was on the 24th, right? 24th of March of last year. It talks about harmonic divergence strategy. All right. Now, it goes into more depth in here. So you want to make sure that you come and watch this session here to really learn more about divergence. But we're going to touch into it on this training right now. But you want to go ahead and do the homework and watch this session so you can get a better understanding. Okay. Now, for the smart money, right? The educator that you want to follow, okay? The educator that you want to follow is, let me put it here. So you want to come to the FRX. So you want to come to the Go Live FRX, and it will show you the educator. Let it just load for a second. Okay, I'll show you the educator that you can follow to learn about this smart money concept, the ways that the banks move in the market and how it can help you, right? So the educator is called Rock Kumar. So take note, Rock Kumar. As you guys can see, it teaches the smart money concept, all right, which we're going to talk about today very briefly. So Rock Kumar coming to this session. Let me just open one of his lives and coming to favorite session, guys. And in here, guys, he has so much sauce, right? So much sauce. One of the sessions I would recommend you to watch to understand really how to find entry within the time the banks are entering and leaving. Let me find it here. And it does talk about divergence too here. So on the 24th, right, 2019, all right, take a screenshot. There's a video that it talks about entry techniques and nuggets, all right, and it really shows you how to find where the banks basically did put a lot of money in the market to make the market move from point A to B, all right. And if you learn to find where they came in, most of the times they go back to that point to break even, to close their position in profit. They move the market to where they really want to take it, right? So these are the educators. So Rokuma, okay, Rokuma and Maniki Nonis. All right. Now let's get into the harmonic scanner. By the way, if you did take the trade that I sent earlier, one of the scanner trades that I sent earlier, yeah, and if you made some blues, drop a number 1, all right, or just drop a blue heart or blue emoji or something like that. If you did take that trade, it hit TP1 and TP2, all right. So we're gonna break down that trade. Why did I decide to send that trade to the family, right? So we can all eat from the trade. Now, let's talk about smart money briefly, just briefly, right? For those who were not here last week, let's talk about it. Andrea, Rose, fantastic. Christine, awesome. Now, if you guys remember, what I said about smart money was that the banks, in order to, to make the market move, they need to create a certain narrative, right? We are retail traders. We are in this market. We can't compete with them, right? So if you have that idea in mind that you can compete with the banks, you basically illuding yourself, because you can't compete with them. They have more, they have more money than you, right? They have way more money than you. So this is their market. You just have an opportunity to participate in the market and and also have the ability to make your money work for you, right? Without having to go and ask no one. You learn the skill, you make a little, become a lot, right? Now, what we spoke about last week is that the banks, what they're going to do, they're going to create a certain narrative, right? So let's use this example. Let me just I'm not good at drawing, but I will try. So let's say that this is the price, right? The price is just trading within this range. All right. Let me delete this one. Let's pretend. Let me make it red, just so we can see. Let's pretend that the market is just staying within this range, bouncing up and down. Okay, up and down. We would call this consolidation, or we would say just that the market is trending sideways, right? Now, what does that mean? When the market is consolidating or is trending sideways, that simply means that the banks are not really in the market, right? What you have in the market is small investors, retail traders, placing trades, placing sales. Let me change the color of this, right? Because we don't have enough money to move the market. They do. So when they come in, you will know, right? Let me change the color of this. So some people are selling from here, from the top of the range, right? Some people are buying from the bottom of the range, but the market is just bouncing, staying in the same range, bouncing up and down, right? And when that's happening, there's something that is being created, all right? There's something that is being created, and that's called liquidity. And what is liquidity? Liquidity is money, right? Let's go into it. So this is going to come all together with the scanner, right? Liquidity is money. So above the range and below the range, there is what? Liquidity being built, right? Which means there's money for grab, right? The small investors are creating liquidity. So the banks are creating a certain narrative and basically creating a trap, right? You don't want to be trading on the sideways market. There's people that will trade it. Once you have more experience, then maybe, but me, myself, I don't. Either trending up or downwards, right? So just remember this. Whenever you see a market trending sideways, just know that there's liquidity being built, which means there's money. There's a lot of money above it. There's a lot of money below it, all right? And there's only two things that can happen. Either they will break that range, okay? They'll either do this. For example, let's say that the price is down here. Let me just use this one. So just tell me how many times you saw something like this, right? Like just like a big candle. So the market has been trending just sideways, then suddenly a big candle, right? Just like that. Let me get a sell one. Let me just get a sell one here. Okay. Now the market was trending sideways. Suddenly you see this big candle from nowhere. Well, it didn't come from nowhere, right? It came for a reason. And that reason is the big people that came into the market, right? So what on let's say someone that is no experience or has no knowledge of the market, just trying to learn and will commit some mistakes, will do when you say something like this, right? Normally, someone that is no experience would say, okay, the market came here once, twice, three times. The fourth time, I'll sell. Fantastic. And they'll see this pattern, right? Then they'll say, okay, the market came here once, twice, three times. The fourth time, I'll sell it. Then when you click sell, boom, you see this big candle going into the opposite direction. Then your stop loss is probably just above, right? Taken out, wiped, right? You put your stop loss, you've been taken out of that trade. Okay. Then what you see next? Okay, what do you see next? Then the trade comes back to your direction. But by the time you notice, you've been what? Manipulated out by the banks. Why? You didn't realize that this is basically a trap, and that is liquidity, and they'll always go and grab because they need, right? They need liquidity to move the market. So just understand that they need liquidity to move the market, right? They can't just from nowhere and just drop millions and just move the market, right? When they do that, they get fined, right? Now, just remember, above a consolidation, right? There's liquidity being built. Now, how do you know which way is the market is going to go next? You need to be patient. So the first thing that you need to do, you need to know what's the overall trend, right? You can check the monthly, the weekly, the 4 hours, right? If you're going to the monthly, see the overall trend is a downtrend, right? So it's most likely that from that range, that is most likely, even this is manipulation, right? They'll take you out. But the overall move is a down move, right? That's what they want to do. That's where they want to take the market, okay? They manipulate out, take you out, then move the market to your direction. Now, how can you use that in your advantage, right? Because when they come in, I already said, you cannot miss them, because you'll see a big candle and straight away after that candle, you see an opposite, even bigger candle. You know the big boys are in the market now, right? You know the big boys are in the market right now. So let's go into the scanner now. Before we go into the scanner, there's something that to spot where the smart money is or where the banks are. You look for the last. Let me just show you guys an example. So everyone understood this concept here. When the market is trending sideways, then you know there's liquidity being built above. Okay, Joy. So we're gonna go through that now. All right. So one of the ways is you wait for the market to give you a clear direction, right? You stay out. You let the market give you a clear direction. Once the banks make the move, now you can use the smart money concept to find their entry, because they already told you what direction they're trying to go, because they already made the move, right? Now let me show you guys how do you spot it. Okay, let me delete this. Now, instead of deleting it, let's create a new one. Okay. Last week, let me use this. No. So let's say the market is trending downwards, right? Sorry for the drawing. Let me delete this one. It's not a good one. So going up, down, making lower highs. All right. The market is trending down. Okay. Now, when the market is trending down and they want to, change the direction of the market, they need to do something, right? They need to do something. They need to create. They need to dump a lot of money to start breaking the previous lower highs and start making higher highs, right? So let's say the last high was here, and the price right now is down here. Okay. Let's say that you come into the market and you see the price right here. Okay. And now, suddenly, okay, let me grab this. You see a big candle like this. This high here was taken out now. Why? Let me grab an arrow. Now, this high was taken out by what? This big candle. Okay. This big candle. Hold on. Let me move this out of the way. Hold on, guys, 1 second. Trying to move this out. Fantastic. Okay. Actually, let me go back to this example here. I think it's going to be more clear, right? Let's say that a market is, let me move this. It's doing this, right? This. Then suddenly it breaks out, right? You see a big red candle, right? Let's say that this is a candle, for example. Okay. This is a big candle that took out all these lows. All right. If you straight away, you see a big blue candle. I'm using a green one, but I can make it blue just for the red and blue. Okay. Straight away, they make a buy move. And most of the times it's bigger, the candle is bigger than the sell candle, right? So this is just like basically like trying to tell you, we broke that low, we did manipulate you out, now we're gonna push the market upwards, where you initially thought that the market was gonna go, okay? Where you initially thought where the market was gonna go, but it just took you out, right? So you need to focus on this candle. And you call it the sell before you buy candle. All right, let me just grab one of the notes. This out of the way. Where did he go? Where did he go? I can't find the notes here. Okay. So this candle is called the sell before you buy candle. All right. Yeah. Or you can call it like that, girl. All right. So the sell before you buy. Right. The sell before you buy. So they push the market down, right, with such force, then they push it straight up again. Now, they can't hide themselves. You just saw what they did. They manipulated these lows. Why? There's liquidity below, so they're always going to be attracted to it. Okay, depending what the trend is. Let's say the trend overall is an uptrend, right? You should know that if they do this and they push the market up straight away, and that candle is way bigger than the red candle, right? So then you know this is where they are. So you pay attention to the sell before you buy candle. And what they're gonna do, they usually come back to it, right? And that's when you want to come for your entry now. Okay, they usually come back to it. they either come and just fill the 50% of it, basically just take just come with some come out with a little bit of loss. All right, I mean, they don't really lose, or they'll just come and fill the whole candle, right? So what you want to do, you want to find the 50% of that candle, right? And you do this by using the ruler here on the side. Okay, there's a ruler here on the side on your trading view on the scanner. There's also, you find the 50%, right? You just put from the bottom to the from the top to the bottom, and you can grab a horizontal line and just put it in the middle, right? Fantastic. So now you know the 50% of that candle is here. And what they do, let me copy this. Clone, move this out of the way. So some people have been taken out because they were just impatient, they were manipulated, they saw this. Then what they're gonna do, then they're gonna come back. And this is when you want now to come and enter the trade, because you know the overall direction that they really want is upwards and not downwards. All right, let me know if it's making sense, guys. Right, market is basically psychology, guys. Let me know if it's making sense. All right, so there's a lot of manipulation, and they know that an average person will not have the emotional intelligence or the emotional strength to, we're talking about money, right? It's very important. Okay, and you really need to know the market that you are trading at. All right. Yeah, so we're gonna go through that, Andy. All right, we're gonna go through that. Now they will come back. They will either come to the 50% or they will come and fill up and either the 50% or the opening. Okay, the opening would be here. I'll say so they would come to the to the opening, right, which is the top of the candle, or to the 50%. Then what you do, you just highlight that area, because you know now, right, that that's where the money is. I always say, where is the money, right? That's my thing. Where is the money? If you guys can see, right, my fiance got me this. Where is the money? Okay. You need to trade with them and not against them. Then what happens next? You get that, they call it perfect entry or sniper entry. You don't have to get a perfect one, but that's how you can get really good entries, right? Then they take it up. Now you're riding with them, okay? And for the sell, is the same thing, right? Just opposite. Let's say the price was, let me move this out of the way. Let's say that the price was here and they just push the market up, okay? This big blue candle. Let's say the trend overall was a downtrend and they straight away move the market down. The sell candle is bigger. So for sell, you need to look at the buy before you sell candle. Let me move this out of the way. We're going to go into the scanner shortly, and let's break down the trade that I've sent earlier. All right. So if it's a sell, right, look for the buy, the blue candle, or whatever color that you put your candles, the buy before you sell. Okay. And you will see a big blue candle and a big red candle down, and it's usually bigger. All right. And you see a strong movement down, or if it's a buy, strong movement up. So what you want to do, find the 50% of that blue candle, right? And look at the opening and the 50%. Now you can find your entry and you just highlight that area, right? This is how you can get a good risk to reward and have basically 10 pips, 15 pips, 20 pips. There's people even use half pip stop loss, right? Okay, but you really need to become good at seeing these things. You need to train your eyes to see, right? If it's making sense, just say yes. So we know to spot them. If it's a buy, look for the last red candle that took out, okay, all the lows, all right? Then if it's a sell, look for the buy candle that took out the previous highs. Then it came down. They will usually come back around and break even their position. Okay, fantastic. Now let's go into the scanner. Let's see what was happening into the scanner, Harmonics, right? So let me know if you can see the Harmonics. Let me know. Let me know if you can see it. Say yes. Fantastic. Now, this was a trade that was sent into our wealthier world, Discord group, right? I called this trade, and within, I think it was like a minute, it came straight away to TP1, right? I'm going to talk about one of the confirmation that I used that helped me find this trade. I basically just opened the scanner to do some, to check some stuff for you, live example for you guys, and I saw this trade, and I ended up sending it to everyone, right? Now, let's look at this. Let me just close below here. All right. Let's look at AUD CAD. Why did I send this trade? All right. Remember that when I said that whenever the market is trending sideways, there's what? Liquidity being built below, right? Okay, Junior. I'll make sure that I do drop this recording because I think it's the most complete one that I've done so far. So I'll make sure that I drop the recording, and you can always review. All right. If I'm going too fast, guys, don't worry. Go and watch those educators on your own time. Now, the market here, we can see that we're just going up and down here in this range. Okay, just here. All right, just here in this range. Now, let's see what happened here. Let's pay attention to this area here. Here, right? We can see that the market, let me just highlight it. All right. Right. Look, we can see that the price was within this range, bouncing up, down, nearly there, down, up, down. Now let's look here, right? Where did the movement, the move that came and took out these lows came from? Where did it came from? Right? Let me move this out of the way. If you look at this blue candle here, right? Look at this candle. After that candle, what happened? Big sell, right? Even went a little bit up and came down, but this is the overall move down, right? It took out all these lows, right? Let me make this arrow black for everyone to see, right? Here, this blue candle here, the scanner is giving us a sell, right? Always look left to find these things, right? Look left, okay? And we see that the movement that took out all these lows, right, came from here. This is where they pushed the market up before they sold it strongly down. So now we know where the money is. Here, this blue candle. So we look at where is the scanner giving us the entry, right? The scanner is giving us the entry here. So you look left and you see if you can spot what happened before, when did the last high was taken out, when did the last low was taken out, right? By which candle? If it's a buy, you want to see a red candle taking it out. If it's a buy, you want to see the blue candle taking out the a sell. So you want to see a blue candle going up and then straight away a sell. So this is the candle. Now the scanner is giving us entry here. Yeah, it's around there, right? So that gave me more confidence, because if I measure this candle here, this last sell, this last buy before you sell strongly, right? This is where they are. So if you guys remember, I always ask you guys, what do you guys do once you guys enter trade and the trade is in profit? What do you guys do to protect yourself? All right. What do you guys do? Your trade is in profit. You are in blue. You want to have a peace of mind. You want to protect your trade. What do you do? Okay. Let me just make sure that I've got a thing here. One second, guys. What do you do? Just let me know. Andrea said move stop loss. Heather Joy, move stop loss. Awesome. So you want to protect yourself, right? Now, the banks, they don't mind being in drawdown for a while. It's cool for them. It's fine. They have more than enough. They make money regardless, right? They make money regardless, right? By manipulating you out, collect liquidity. This is the market. So they're doing the same thing as you. So like they're willing to be in drawdown for a little bit just to take you out, collect liquidity, but they will go back, right, to where they came from. They either to close their position with a little bit of drawdown or really close with profits. They move the market, right? So they're doing the same thing as us, but they have more capital, right? They have more capital than us. Now so this is where they come from. If I measure the candle, remember, like I said, they'll either come to the opening or to the 50%. All right, the 50% of it. If I use the ruler here on the left-hand side, all right, just below the arrow, there's a ruler here. Some people use Fibonacci, but you don't need to use Fibonacci to find 50%. Just use the ruler, right? Put at the bottom, the top. Now this arrow here in the middle is telling you what's the middle of it. So 50% is half, right? There you go. Let me grab a black line, okay? Now let's go and see. Look where the market came before, right? Here, down here. Exactly to the 50%. Awesome. Let's see what's happening. All right, once more. Again here. Let me grab this one. Once more here to the 50%. So there's a pattern, there's thing happening here. Once more, look what happened here to the 50%. And it goes there to the T. So if you hear like sniper entries and things like that, this is what they do, right? They find where the money is. Then look where the price nearly went to. Again, once more to the 50%. Remember the black line. So when the price came up to it and it started reacting from it, that's what made me more comfortable to send this trade out. And the trade ended up dropping, right? Because that's where the money is. Plus, the overall trend is a downtrend. So if a market is on a downtrend, so what do you want to look for? Selling opportunities, right? So everything is aligning. Is a downtrend. They're coming back to where they sold the market strongly before, to the 50%, or to close it in profit. They moved the market. Fantastic. So it was a right time. But there was something else playing out here. But before I enter this trade, if you guys remember, I always tell you guys to check the currency strength. All right. Okay. I always tell you guys to check the currency strength. I would have not sent this trade if I saw that the currency strength, the currency that we're trying to sell at that time was stronger than the opposite one, right? So when it came to this, the AUD had one more bar than the Canadian dollar, right? if the difference between them is just like 1 bar, there's no much difference. If the trade is in the area where the money is, right? And the scanner is giving an entry in there to sell or to buy, and you come and check the currency strength and you see the difference between them is just 1 bar, I would say go and take that trade and just put your stop loss, right? Because the probability is on your side. Now, so these are lines. So say, cool, let me send this trade out. Okay. But there was one thing else playing out. All right. The price was where the money is, right? The price went multiple times. They came to it. It's a downtrend. The market's going down. The scan is giving us a sell. Fantastic. We want to sell on the downtrend. We want to buy on the uptrend. That's it. All right. Now, there's something called divergence, right? There's something called divergence, guys. And what divergence is, right? There's some indicators that help you to basically know the difference between the price, right? What's happening in terms of the price. There's indicators showing you what basically really happening. All right. So in here, you might see that the market's going up, it's doing higher highs. But when you look at the indicator, which we're going to use one of them, is doing the completely opposite. So which means there's divergence. It's basically a lie. There's a false narrative being built there. So all these things aligning, I was like, nah, I have to take this trade, because all the confirmations that I would usually look for, they're here right in front of me, right? So let me just take my trade and put the stop loss, and I send to everyone. Now, how do you spot divergence? So divergence is when you see a difference between the what the price is doing and the indicator is doing. And the indicator that you want to use, I removed it, but it comes already with the scanner, okay? It comes already there. You see all the time. Is the RSI. I'll just put it back on, right? On Manikinone sessions, you will learn about, let me just refresh this. So it gives me the, on the Manikinone sessions, it will show you a couple of different indicators, all right? So indicators, they're indicating you something, but don't just rely on them to take your trade. All right, let me just load the trade we were looking at. Where did he go? Where did he go? Where did he go? Here. Let me just load it again. Let me load this. 1 second, guys. Trying to load the same trade. Yeah, fantastic. We're back here, right? So the indicator is the RSI. So it always comes, it's always down here at the bottom of your screen. All right. Let me show you how to use RSI. Let me give you guys a simple explanation of what RSI is. Okay. Now, let me just make this full screen, or you can make this full screen here on the side. All right. Let me explain you guys what these lines mean. Okay. So the line at the top here, let me change the color of this. Make it black. This line here, all right, that's the 70 line. Okay, as you guys can see, the number 70 is here, right? Let me move this away. The number 70 is here. So you have the 70 and you have the 30 line at the bottom. So the 70 line, just a overbought area, right? Which means a price is approaching an area where it's like appreciated too much, right? It's overbought. There's too much of it. All right. There's too much supply of it. So it's most likely what's going to happen? It's going to fall. So overbought, the 70 line, right? Oversold is the 30 line. So when you see the lines approaching, right? For example, if the price is going up and is approaching the 70 line, So you know the price is reaching a area where it's most likely to start falling. Okay, it's overbought. If it's approaching the 30, it's oversold. And we see the price reacting to those areas multiple times and pushing up, coming down, right? Pushing up, coming down. Now, one tip, don't just assume that the line comes here, right down here, like to the oversold area, I'll just click and buy. No. What can happen? The line might just continue going down. This is just an indicator. So just don't just rely just on it to take your trade, right? It's just indicating you where the price is. This can still happen, as it happened here, here, here. The price can go past the line, but this indicator is just showing you where the price is right now. Then you assess with everything, and the same thing can happen here when the price comes to the overbought area. It can just push up, and the line can keep going up, right? But you just know where the price is at that time. Okay. Now, how can you use this to look for divergence? Because basically, what's happening here should be happening up here. So whatever the candles are doing here, right? The line is supposed to be doing here. Same thing. If the candles are going up, the lines are supposed to be going up as well. If the candles are going down, the line is supposed to be going down. But what's going to happen sometimes is that the complete opposite is happening. The complete opposite is happening. So let's look at this. Let me show you guys how to, because you need to train your eyes to see. Let me delete this. So when I came into this, right, the price was here. What I did notice was that the price was doing equal highs. It was just staying here, right? Just here, consolidating here, was doing equal highs. But when I came into the RSI, in the same area, let me just put a line here. All right, let me put a vertical line, make it black, just to help you guys visually see what's happening. Okay, let me get another one there. Let me just make it thick. No, sorry. A second. Move this. Make it thicker. Give me just 1 second. Guys, let me know if it's making sense, right? So this same area here, rectangle, right? This same area, we can see the price was just making the same highs. If we look at this in the same area, what's happening? Is the lines making the same highs, or is the line just basically doing lower highs? So in here, the market is doing basically is going to the same point and coming down, same highs, right? But what's happening here? Can you see it? What's happening on the indicator? So what's the indicator telling you? Okay. Is it the same thing happening? Is the indicator doing equal highs, or the indicator is doing the opposite than what the chart is doing, the candles are doing? Let me know what you think. Doing the same or the opposite? Okay. Adiola said opposite. All right. Opposite. This is the power of divergence, guys. So it's basically telling you, right, what's happening up there is not really what's about to happen. The real movement is this down here. Okay. So what you do to help you spot it, all right. So at that time, what I saw, so what I did, I grabbed a trend line and put it from the top to the most recent high down here on the RSI. All right. This is just to give me a kind of visual idea. Don't just visually to help me see it, right? Let me make it thicker so everyone can see it. So everyone can see it, right? So we can see if we connect this high with this high here, the line is going down. But if we connect on this one, literally, we can just put a vertical line on it, right? It's basically doing the same highs, right? The same highs. So what's happening? The opposite is happening. So there is divergence. So I straight away knew that the buyers are not the ones in control of the market anymore. The sellers are the ones about to come in, right? And remember, the overall trend is a downtrend. So I know the sellers still in control of this market, but the buyers push the market from here all the way up there. This is just showing you the buyers party has finished, right? The buyers were in lockdown. The police came down and said, hey, you guys are supposed to be in confinement, in lockdown. The party's finished. We're gonna find you guys a big red candle. And this is what happens, right? Just as an example. Okay. So that's why I decided to take the trade, because I saw divergence. I saw that the real movement really is a sell. And the price was really where the entry is, right? The price was really where the entry is. So, guys, does it make sense? So RSI is really simple to use, but you need to train your eyes to see what's happening. What's happening up here if it matches what's happening down here. Okay. And if all these confirmations online, the currency, the currencies that you're trading, if you're selling it, is if they have the same strength, go for it. If there's a big difference between them, then you might wait. You see divergence, you see where the price is, right? You look left, you identify where the money is, right? Then you go ahead and you take your trade because you've seen what's happening. I'm going to show you guys more examples of divergence, all right? Even if we look back here, okay? Let me show you guys here. Let me show you guys a divergence example, another one, any. So you can find this at any time frame, right? You can find this, oh, look at this beautiful one. Okay, let's look at this, all right? There was a clear, now, this was a USD JPY, right? So the market here was doing higher highs. So the chart is telling you that this high is higher than this one, right? So sorry, the chart is telling you that there is equal highs here happening here. Let me move this out of the way. There is equal highs here, right? It's telling you that the market was going on an uptrend. Okay, let me look at this. I know this is a downtrend. Okay, so the charts are telling you that this is equal highs, right? Fantastic, that the market basically is supposed to be doing higher highs. But when you look down here, look what the line was doing. Can you guys see it? Look what the line was doing. If we connect, let's say, for example, let me show you guys how can you guys draw in it, into it and to help you guys visually. So what you want to do, right, to spot it, to help you visually, you find the previous, the most recent high, and you look at the previous high, right? If it's a sell, you come here to the side and you're gonna grab a vertical line, all right? Grab a vertical line. When you grab a vertical line, you put it at the most recent high, all right? And what you do, you grab another vertical line, but now you place it down here where the indicator is. And you just make sure that it does align with the previous vertical line that you did place, right? This is just to show you this candle here down here is like represented like down here, right? This blue candle, this high is this high. Then what you do again, you find the recent high, right? You put the vertical line again. You came down here, you do the same. You just align it. This is just to help you visually, right? And then now what you do is you can grab an arrow, but I'll just grab a trend line and just connect them, right? And just connect them. If you connect this and this, right, they're basically doing the same highs, all right? So you basically just connect the highs. Then you come down here, you do exact the same, right? You do exact the same. This will help you visually see what's happening. Now, can you see it? You have one line going straight, you have one line going down. This is divergence, ladies and gentlemen. All right? The indicator is in the complete opposite. So this was no surprise, right? The drop, this sell down was no surprise, right? All the way to TP1, then it reversed, it came back again. Was not surprised. Why? There was divergence playing in, there was no bias, it's the sellers. And if we look left, what can we see? Oh, the market was doing just trading around here. It came up, it was basically to take some people that were selling from here, right? This is the real movement. Took out all the lows. We look down here left, we know this is where the money is, right? And that's where the scanner is giving us the entry, okay? And that's where the price went to. So this is where the money is. There is divergence. Now let's talk about something that's called rejection candle. Guys, if it's making sense, okay, let me know. All right, no worries, Joy, and no worries, Sonia. See you next week. I'll try and get the recording today or tomorrow because my laptop is always lagging and not recording properly. That's why I haven't put the other one, all right? Just one last point. Let's talk about rejection candle. The rejection candle is straightforward, guys. Okay, so you want to see divergence around the entry area, all right, where the entry is. If you see where the entry is, perfect, go for it. And you want to see what? Rejection candles. Rejection candles are this. You see the price not going further than that area. You see these big sticks, the candle leaving sticks behind, wicks behind, multiple times. So it's basically telling you that the sellers don't want the price to go higher, right? So the price keeps on rejecting. And you see it. If you see these candles around your entry area, right? That's even a good confirmation. So you have divergence, you have candles rejecting from that area, you have the price around the area where the money is, you check your currency strength, what it's doing, go for it, take your trade. All right. So rejection candles, they look like this. Look at this candle, just a stick. The price tried to go up, the seller said no, pushed it down, and vice versa for the buy. Right? So rejection candles will look like this. Sticks, small body, big sticks. All right. So this is what I wanted to introduce you guys today. All right, give you guys. So divergence, guys, is a big factor, and you can find it at any time frame. You just have to learn to spot it. Once you get used to it, you can open a chart and see it there without even having to draw anything, right? But always use the vertical lines, connect them, and so you can see what the indicator is showing you here in the charts, okay? So if it doesn't make sense, guys, drop a number one. I know some of you have to go to the HFX session, but this is the session for today for the Harmonics scanner, all right? It's just to show you guys, just by using this, these free confirmations, really, right? look where the money is, look left, look where the price is, and look for divergence. Okay, check the currency strength, and see if the currency that you want to sell is way weaker than the opposite one. Then put your stop loss. All right, put your TPs, use the right risk management, and you are good to go. All right, and make sure that you go and check the educators that I did show. Okay, you don't need to look really far left. So in case of a sell, if the scan is giving you a sell, look where the movement that took out the previous lows, right? Let's say the market was staying in a certain area. Look where the movement that took out those lows, right? That's where you basically, that's how you know where the money is. All right, and you find the last buy before you sell candle, right? And you highlight it, and you can wait for the price to get to that same range. That's how you can catch big moves. All right, so you don't need to go really further back. Look what's happening within the scanner pattern, right? And you see what's happening there. Okay. Yes, Linda. You really need to go for it again, because it takes time to to make it sink in, because you need really. And one thing, guys, to understand all of this and to get better at trading, you need to spend time like in the charts. There's no way about it, right? There's no other way about it. You need to spend time on the chart and get into the like the mood, the way they move and things like that. And really, that's the only way, right? That's the only way. Spend time in the chart and train your eyes to see what some people. The only difference between there's no such thing as a better trader. Is their awareness and perspective, the way they see things, right? And the way they basically discipline, right? So discipline, emotional intelligence, and things, because I might know everything about the market and not be successful, right? Someone might come tomorrow, stay for a month, and be successful. Why? It's not about how much you know, right? It's how you really use it. And this market, guys, has to do a lot of psychology and emotions, and you really need to work more on yourself than on the charts. Trust me. All right. So, guys, this is the training for today. I'll see you guys next week. I'll put I'll put it on the wealthier world. All right. I'll put it on the wealthier world. And if you don't follow my YouTube, or if you don't follow me on IG, all right. For those that were here last week, I'm doing a challenge, um, growing a 50 pound into 10K in 6 months. All right. And if you don't follow me on YouTube, I'll just send the link here. You can go and subscribe to my YouTube channel where you guys can see my progress. How am I going to do this? And next week, guys, we're going to talk about more about how to adjust your risk. We're going to talk about compounding, how to use the risk to reward tool. Is next week the training is going to be more about how to manage your trade. Okay, let me just send my channel link if you guys want to give me a follow. I have two channels. One is just for the to support the team with tutorials. The other one, I'm just basically sharing my journey in trading. Okay, let me send it here. As you guys can see, 1 second. Guys, if you found value on this training, you can tag me on IG, show some love. If you found value, if you learned something new. Okay. Let me find my channel link. So this is my channel, okay, on YouTube. So where is the money is my, that's what I like to trade. All right. So go ahead, give me a follow on YouTube. Follow my journey. You can also learn some more stuff here on my YouTube. All right, guys, take care. I'll love you, leave you. I'll see you guys next week, and make sure that you do the homework. Okay, go and study. Go and watch those educators. All right. Um, thank you, Gladys. Go and watch those educators because you're paying for the platform. You better use it as much you can because you want to be able to one day walk away and know you can do it yourself. All right, that's the aim of the platform. Learn, use what you need, and bounce, basically, right? But we stay because we love the community and we love helping each other, right? So guys, take care, and I'll see you guys next week. I'll try and drop this recording either today or tomorrow, but please do the homework. All right, take care, guys.